And let's go over my bullish and bearish Elliott wave scenarios on Bitcoin, starting with the bullish scenario where we're looking for an impulsive structure to the upside where wave 1 is finished after a 5-wave impulsive move, and we're looking for this wave 2. The common target for your wave 2 is between the 0.5 and the 786 Fibonacci, taken from the low to the high of wave 1, giving you a target between 64.3k and 59.8k. The 382 has been touched, a minimum target for a wave 2 sitting at 66k, but it is an uncommon target for 2, and the 886 is very rare at 58.2k. The invalidation for this scenario is the low of wave 1 at 56.5k. You can also see that the low over here has been made far before the 0.382 fib time that I have on my chart. This fib time is taken from the start to the end of wave 1 to compare wave 1 in time with wave 2 in time. Now it is common for a wave 2 to be short in time, but preferably a wave 2 is ending after the 0.382 fib time, sitting on the 22nd of June, after which we then expect continuation to the upside in a wave 3. The bearish scenario is a bigger sideways 3-wave structure in a W, X and then a wave Y. The common target for a wave Y is between the 0.618 and the 1.236 trend-based fib extension, taken from the start to the end of W to the end of wave X, giving you a target between 63.2k and 54.3k, with the 1.618 being an extension target at 48.9k, but that is an uncommon target for a wave Y. What lowers the probabilities of this scenario, however, is your wave X, and in particular the wave C inside X. So in X, we're looking for an expanding flat, a 3-wave A, 3-wave B, and then a 5-wave C to the upside. You can see the vertical line, that is a fib time taken from the start of A to the end of B, and your wave C is over twice the length of A plus B, and that significantly reduces the probabilities that this move to the upside is a wave C if counted impulsively. Instead, the probabilities would be higher to count this as either a wave A or a wave 1. Locally, we have a 3-wave structure to the downside labeled an ABC, and if this was your low and you look for impulsive continuation to the upside, then we wanted to count one of 3 impulsive structures. First of all, a normal impulse 1, 2, 3, 4, 5, but wave 4 retraced too deep, invalidating an impulse to the upside. Then we have a diagonal structure 1, 2, 3, 4, 5, but it is way too early to start talking about diagonals, so it doesn't make sense. And then we have a double 1, 2 and a 1, 2, 1, 2, incredibly low probabilities, almost invalidated as well. So the probabilities are therefore much higher to continue this range for a little bit longer in a WXY or a flat ABC. Now in this case, the zigzag here to the downside is labeled as a wave W, look for X, and then a wave Y to the downside. Common target for X is the golden pocket to the 886, taken from the high to the low of your wave W, giving you a target between 69.7 and 71.3k. In this area, we have some additional resistance, the blue box here, 70.8k to 71k as well. Now currently this move to the upside is very short in time compared to the move to the downside. If we take a fib time from the start to the end of wave W, then you can see that if this is the end of your wave X, the high here has been made far before the 0.382 fib time. A wave X can, however, be quite small, but preferably also a wave X would finish after the 382. So the probabilities are there for a wave X to continue ranging a bit longer before then moving down in a wave Y. The second scenario on the chart is a flat where you have a 3-wave A, you look for a 3-wave B, so over here we go above the high at 72k and then get an impulsive C to the downside to move below the low of wave A at 66k. The most common flat is an expanding flat, and wave B in an expanding flat has a common target between the 1.236 and the 1.38 Fibonacci, taken from the high to the low of A, giving you a target between 73.3k and 74.2k. If price would continue to the upside and touch the 1.618 at 75.6k, then the probabilities will significantly decrease for a flat and the probabilities are higher for continuation. We do have some CVD on the chart, a bullish CVD here, a higher low in price, lower low on the CVD. There is absorption of market shorts with limit long positions, and the target for the bullish CVD divergence is this high, and the invalidation is taking out the low. We do have some news again today as well. So yesterday, of course, was quite a volatile day, but also today, Thursday, June 13th, we have some news at 2:30 p.m. Central European time. So make sure you trade safe around this hour. And if we then finally look at the probabilities of the different scenarios, then on the daily time frame, the probabilities are higher for the bullish scenario compared to the bearish scenario, where we are going to take all-time high before anything else. And on the 1 hour time frame, the probabilities are higher to continue this range in a WXY or a flat. I hope that this video was helpful or valuable to you. Please check out the brand new complete Elliott Waves guide playlist I've made that shows you all you need to know about Elliott Waves. Thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.